Ladies and gentlemen, good day and welcome to Emami Limited Q4FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy Pantaki from IIFL Capital. Thank you, and over to you, Mr. Pantaki.
Hi, good evening. Welcome, everyone. I have with me the management of Emami. I have Mr. Mohan Goenka, Whole-Time Director and Vice Chairman, Mr. Vivek Dhir, CEO, International Business, Mr. Gulraj Bhatia, President, Mr. Manish Gupta, President, Sales, and Mr. Giriraj Bagri, Chief Growth Officer, and Mr. Rajesh Sharma, President, Finance and IR. Without further ado, I'll hand over the call to the management who will take you through the results, and then we'll have Q&A. Over to you, sir.
Okay. Thank you, Percy. Very good afternoon, ladies and gentlemen. Thank you for taking this time to join us today for our earnings call for the fourth quarter and the financial year ended 31st March 25. Consumption demand trends in quarter 4 remained similar to the previous quarter. While rural markets continue to perform well, mass urban demand remains subdued. In this scenario, I am pleased to report that our core domestic business continued to deliver robust growth this quarter also. This time, growing by double digit at 11% with volume growth of around 7%. This growth was achieved across brands and categories, reflecting strong, well-rounded performance throughout the portfolio. Navratna and Dermicool range grew by 16%. BoroPlus range delivered growth of 27%. Healthcare range grew by 13%. And pain management grew by 1%. In the male grooming category, our recent rebranding efforts are showing early success. The newly repositioned Smart and Handsome brand posted a 7% growth, and Kesh King delivered flattish growth this quarter. After absorbing the revenue decline of 12% in our strategic investment portfolio, our overall domestic business grew by 9% in Q4 with a volume growth of about 5%. We are proactively addressing challenges in the Kesh King and the Man Company. We are sharpening Kesh King's strategy on solving for both medium-term strategic issues as well as tactical challenges, e-com, pricing SKU mix, and media effectiveness. We are confident that these steps will drive a turnaround this year. Similarly, for the Man Company, we are targeting to ramp up growth this year, focused on scaling of marketplace, share, quick commerce, a 360 brand revamp, and performance-based spend optimization to drive profitability. We are very happy to inform that Mr. Zairus Master has joined as the Chief Operating Officer and Director at the Man Company. He brings with him over 2 decades of rich experience across multiple industries. In his most recent role as Chief Business Officer at Honasa Consumer, Zairus played a pivotal role in managing brands like Mamaearth, the Derma Company, Aqualogica, Dr. Seth's, and B. Blunt. During the quarter, we also forayed into the brightening category with the launch of Emami Pure Glow, a skincare offering designed to address evolving consumer needs. The brand has been rolled out in select markets, and we have onboarded Rashi Khanna as the face of Pure Glow. In FY25, we introduced over 25 new products in our domestic business, including 11 new launches on our D2C portal Jhandu Care. Our digital-first portfolio on Jhandu Care continues to scale rapidly, growing over 50% year-on-year, and now contributing over 80% of Jhandu Care sales. Products launched in the last 2 years now contribute around 50% to total Jhandu Care sales. On the distribution front, our organized channels, modern trade, e-com, and institutional sales continue to perform strongly. In FY25, these channels together contributed around 28% to our domestic revenue, a 140 basis points improvement year-on-year. While our overall domestic business grew by 7% in FY25, the organized channels grew at almost double the pace at 13%. Turning to our international business, after a decline in Q3, we returned to growth in Q4, posting a 6% increase despite geopolitical and macroeconomic challenges in Bangladesh, Middle East, and some parts of Africa. This growth was supported by strong performance in the SAARC, Southeast Asia, CIS, and Africa regions. Our consolidated revenue for Q4 stood at 963 crores, an increase of 8%. Gross margins expanded by 10 basis points to 65.9%, while EBITDA grew by 4% to 219 crores. Profit after tax grew by 14% to 194 crores, and profit after tax grew by 9% to 162 crores. For FY25, consolidated revenue at 3,809 crores grew by 6.5%. Gross margins expanded by 100 basis points to 68.6%. EBITDA grew by 8% to 1,025 crores, and EBITDA margins for the full year improved by 40 basis points to 26.9%. While profit before tax grew by 13% to 894 crores, profit after tax grew by 11% to 806 crores. I am pleased to share that the Board of Directors have approved a special interim dividend of 200%, translating to rupees 2 per equity share while celebrating 50 years of Emami. Including the earlier two interim dividends of 400% each, that is rupees 4 per share declared in Q2 and Q3, the total dividend payout for FY25 stands at 1000% or rupees 10 per share, representing a payout ratio of 49% on adjusted PAT, fully aligned with our dividend policy and committed to maximizing shareholders' value. Looking ahead to the next financial year, we are optimistic about delivering a strong performance across the board. Our market shares and household penetration across brands are trending upwards, giving us confidence of sustaining growth in FY26. With strategic actions being taken for male grooming range, Kesh King, and the Man Company, we anticipate positive momentum for these brands in FY26. We expect a gradual pickup in consumption supported by easing inflation, recent income tax benefits to individual taxpayers, higher government capex, and a more accommodative monetary policy, including potential rate cuts. With our international business and strategic investments showing promising signs of rebound, we are excited about delivering robust all-round growth in FY26. With this, I would now like to open the floor for questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question comes from the line of Abneesh Roy with Nuvama. Please go ahead.
Yeah, thanks and congrats on good numbers. My first question is on Zairus Master. So here my question is, what will be his key KRA from a next 2 to 3 years perspective? Man Company in the past few quarters, your stake has almost fully become 100%. and the numbers have been a bit volatile. And he has a excellent track record and excellent experience in Honasa, Unilever, Airtel, Nokia, etc. So, what will be his main target over the next 2 to 3 years time frame in Man Company?
Yeah, so firstly, we are very excited to have him on board. We have been trying to reach out to him for quite some time. So this was absolutely part of our strategy to bring someone who understands this business very well. And of course, he has just joined a couple of weeks back, and he's the master in this. So of course, the target is to get back to growth, to take the Man Company and other startups on the fast track. How can we get to, substantial growth? Plus, at the same time, of course, the targets are to see that the brands get to profit in some time. I'm not expecting profits immediately, but of course, the long-term target is to get these brands to profitability. These are the two goals what he has right now.
And one follow-up here, Man Company was also a D2C startup only. So in terms of now this new leadership and the overall performance has been a bit volatile. So is the original team now fully gone? And in terms of anything weak in the business model, is there something weak, or is it just the demand scenario which was weak and the transition was there? Anything you can call out where there was a change needed in terms of strategy?
So there hasn't been much change. Giriraj is on the call. So he's managing, as you know, all the startups. So Giriraj, if you can add whatever you want to add.
Yeah, thanks for the question. A couple of things. First, as Mohanji mentioned, we are very excited to have Zairus on board. And his mandate is essentially to be able to build a good team, restore, scintillating growth rate this year itself, and also a long-term path to profitability. As far as the original team is concerned and the volatility of management is concerned, I think that is behind us now. The promoters have stepped away completely from day-to-day operations, including, their presence in the office. So they are gone. There is a complete brand revamp, which is planned very soon. So I expect a very significant rebound to happen in the Man Company in the months to come.
So my second question is on the cooling products. Those have done quite well in Q4. My question is in Q1, the base is high because last year in Q1 you had done really well. What we are picking up in April and May, a lot of the other cooling categories have not done well because there was all this sudden rains in North India, thunder shower, and temperature became low. So, for example, AC sales, the cooler sales, and even the beverages, all those have cooled off. So, from that perspective and high base, how do you see this category in Q1? The tough comparables in that scenario?
So, Avnish, you are absolutely right. This quarter is slightly challenging as far as the summer portfolio is concerned. We saw fantastic growth in Q4. So primaries happened. Unfortunately, southern markets and some parts of east and west have not done so well. So you are right. We are seeing sporadic rainfalls across India. So sorry, there is some.
Yes, please.
Can you hear me? Can you hear me? Okay. So yeah, you're right. So summer has been is a slight dent. I think let us wait for another 2-3 weeks. If we see some rebound, we have a higher base. So there would be slight challenge on our summer portfolio, but we will try to see if we can make it up with some of our other portfolios. This is always fantastic. This year, yes, it has not gone down so well.
So thanks. I think the audio quality at the end was a bit weak, but I got the gist. Thanks a lot. That's all from my side. Thank you.
You can always reach out to Rajesh, Mish, if you want any further details.
Thank you. Next question comes from the line of Shirish Pardesi with Motilal Oswal Financial Services Limited. Please go ahead.
Hi, Mohanji and team. Thanks for the opportunity and congratulations. I was little bit excited seeing BoroPlus range has grown 27%. Did you see any sudden spike? I mean, winter was extended, but is there anything new which has happened in that segment?
Not really, Shirish. These, when summer doesn't do so well, so BoroPlus does slightly better, and same trends is what we are seeing also in the first quarter. BoroPlus is doing, it's a very, very small base, but April and May, BoroPlus is shining better than some of our summer items. So, it is purely seasonal, honestly.
Okay. The other thing I wanted to check with you, this Smart and Handsome launch has happened towards the end of quarter or early, say, Jan?
Yeah, we launched it in second week of January.
Okay. So by and large, we would have now phased out the SH and everything is getting replaced.
Absolutely.
But is there any return which has happened on Fair and Handsome?
No, nothing at all. Nothing. Not even 1%.
Okay. The other question was Pure and Glow. This is the entry into the skincare. What is the 2-3 timelines we should be monitoring for next 3 to 4 quarters? I mean, yes, we are excited to see the new launch which has happened. But if you actually look at the skincare category, there's a lot of clutterness which is there. So what is it that we are talking different to the consumer?
Actually, every category is cluttered. Of course, we have tried out in larger categories. That is part of our growth strategy. And brightening is a big market, almost 3,000-4,000 crore market with the monopoly of levers. So we are trying it out in certain markets. Is that we will do nationally?
I think I lost you. Your voice is not continuous.
Oh, is it? Okay. No, I'm saying it's a large category. So we are trying it out in certain markets of South. Of course, it's based out of nature and science. We have some clinical results of 2x brighter look plus extra moisturization. So let us see. As I said, it's a large, pretty big market. So basis the initial response, we will take it nationally. Right now, it is at the test market stage. Yeah.
And we are manufacturing ourselves, or it is?
So it is in-house manufacturing.
Okay. Last question on the strategic subsidiaries. I think the performance consolidation, these are all things which I understand. But then
sorry, your voice was not clear, Shirish. Come again.
On the Brillare and TMC, though we understand last year was consolidation and there was some hiccups, but over FY25, if I ask FY26, how you look at this business? I mean, obviously we have a business head. These all things will happen, but there are some aspirations what we have left when the consolidation was happened.
Yeah. So Giriraj?
Yeah. So, and when we look at FY26, both for Brillare as well as for TMC, we are looking forward to a high double-digit growth in both these businesses. And there is a significant investment that we are making in both these businesses to build the brand franchise, especially the top of the funnel as far as TMC and Brillare are concerned. And we are already seeing some green shoots, when we look at certain channels and certain categories in the month of April and May. So we should look forward to strong double-digit growth in FY26, both in Man Company and Brillare.
That's helpful, Giri. Just one follow-up on here. Can you spell out what is the revenue we clocked for TMC and Brillare, and what is the EBITDA loss we would have made on these two brands?
Specifics, please, we will avoid. Okay.
But revenue, if you can share.
Yeah, revenue is about 150 crores and about 50 crores.
Okay. Thank you, Mohanji, and all the best.
Yeah.
Thank
We
you.
have excellent plans for healthcare, and Gulraj is here. We have launched some significant brands in Zandu Care, and we have robust plans for healthcare growth. So, Gulraj, you can also, pitch in and share some ideas, plans if you want for healthcare.
Right. So, I think we've done fairly well in the healthcare portfolio, as indicated by Mr. Mohanji, where they grew by 13% annualized. And it was led by 3-4 categories. One was the D2C portfolio, Zandu Care, which had a growth of nearly 50%. And it was led both by new product launches and various initiatives led by improved marketing, better return on investments in the marketing space, and also more aggressive claims in terms of our product benefits and efficacy. We also did well on some of the other categories in the portfolio in the OTC space, on brands like Nityam, brands like cough syrup, where we grew in strong double digits along with the health juices also. And on the medico business, which we reach out to doctors for, we had good growth there also, both in Q4 and for the whole year. So going forward, we are going to drive improved marketing campaigns, focusing on a better return on investment, considering the fact that consumer shifts are also happening post-COVID. Consumers have by and large reduced spends on health supplements, immunity products, etc. And they are spending more on discretionary products, more on consumption outside the home in terms of restaurants, QSRs, etc. So keeping these trends in mind, we are focusing on other categories besides health supplements, which can drive incremental volume, market share gain, and overall growth. So there will also be focus on NPDs, but I think the focus will be, compared to previous years, more on consolidating and leveraging the NPDs we launched to see how we are able to scale them up in a profitable manner. We'll also be doing a lot more initiatives on the medico business by way of improved doctor connect, medico marketing, and also reaching out to more A-class doctors and focusing on certain therapies which would give us higher returns.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Harit Kapoor with Investec. Please go ahead.
Yeah, good evening. I had a few questions. So one was, if you look at the pain management category for your business, it's been about 7 quarters now of kind of single-digit growth. Obviously, there was one degrowth quarter, but single-digit kind of growth. Moji, from a slightly medium to long-term perspective, is that the kind of trajectory that we should also kind of look at mid-single, high-single, mid-single range in a category that has reasonable, has got reasonable history? It should be kind of a normative growth, or do you believe, you can, in any way, innovations, etc., can also kind of add a little bit more, additional growth to this space? I asked it a high margin segment. So that was my first question.
Yeah. So Harit, you're right. Pain management is an important segment for Imami. It almost contributes to 25% of our overall revenues. And it has got three products. One is Zandu Balm, which is the mother brand, green color, and Zandu Ultra Power and Mentho Plus Pain Balm. These are the three portfolios. So Ultra Power and Mentho Plus has consistently been growing, but unfortunately the green pack, which is the main product, is showing signs of some stress. So, but anyhow, we have a robust plan for new products in pain management. We have launched a couple of products under this Zandu, and this year again we are launching 1 or 2 new offerings. So we are relying heavily on NPDs for growth in the paint portfolio.
Got it. We should see some of that into fiscal year 26 also, the NPD.
Yes, absolutely. This year you will see 2 new launches. Yeah.
Got it. The second was a short one. This, Smart and Handsome growth 7%. Is that indicative of the secondaries as well? That retail level secondary growth is also 6, 7, 8%.
Absolutely. So after a long time, we have seen some momentum in Smart and Handsome. You guys know that this brand was continuously declining, and post the relaunch, we have arrested the degrowth. We are yet to see double-digit growth, what is targeted. But as I had mentioned earlier also that now this is a male grooming segment. It's not just the cream and the face wash. So you would see very extensive male grooming products coming under Smart and Handsome. And of course, we would see growth in this Smart and Handsome. At the same time, I must say that the strategy for Kesh King is also ready by BCG. Hopefully, we will be rolling out in the second quarter. So, by and large, I think we have addressed most of the issues, whether it is the Kesh King, Man Company with Xyrus, we are very excited. With Delair also, I think signs should grow. Smart and Handsome, the decline has been arrested. Healthcare, we are very optimistic of double-digit growth. Other than pain management, I think which we are expecting 5-6% growth. Others should do slightly better.
Got it. The last question was on price growth. So this quarter looks like a 3% type of growth at overall level on pricing. So just wanted your outlook on what should be kind of pricing growth assumption for F26. I know it's normally a 2% up and down a little bit, but just your sense on what it looks like for 26.
Should expect in similar lines, Harit, around 2 to 3%.
Got it. I'll come back for more. Thank you. Thank you very much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Ajay Thakur with Anand Rathi Securities. Please go ahead.
Hi, sir. Thanks for taking my question. So, sir, I had 2 questions. One was just wanted to get a sense on the summer products, how the volume trajectory had been for both Navratna and Dermicool, given the fact that their revenue growth has been pretty robust during the quarter. And also, if you can share some outlook for Q1 for the rest of the summer season.
This is a difficult one, Ajay. As I said, summer has not gone on so well, unfortunately. We had, of course, done some primaries in Q4. So the secondaries are slightly on the lower side because of rains. So we have yet another 4 weeks of summer left. Let us hope if some markets rebound, then we might see low single-digit growth. But we are, Manish, do you want to add anything? Manish Gupta is here.
Yeah.
So Manish, if you want to add anything.
Yeah. So all I will say is that from a Q4 perspective, what the change we did in our strategy was to streamline how we load up the trade and everything. So we've been very disciplined in our loading, and the results are showing in the Q4 results, and both the primary and secondary part was very nice. April is where the pain point is, as we have been discussing, that the consumer offtakes have not been in line with the preparation that all the brands have done across the categories. And it is more pronounced in talc. Oils are not so much impacted. Talc is the one which is facing the heat. And within that, as Mohanji mentioned earlier, it's south and parts of the lower Maharashtra and the parts of Odisha and all that. Now, from an outlook perspective, all I can say is that talc is the one where we are right now keeping our fingers crossed. But having said that, mid-singles should not be a problem. Repeating the base is always tough. That's the current challenge we're having internally. Oil so far looks robust. So while we would have loved more, I would take that mid-singles still is not far away.
Quite helpful.
That helps.
Quite helpful, sir. The second question was more on the correction in the crude oil prices, and we, given that have some bit of a correlation with both LLP and packaging cost. Have you seen some benefit accruing in both these segments? And outlook on the gross margins, that will be helpful.
So Ajay, you have seen that our GCs have been at all-time high, and I have continuously been maintaining that I don't see any pressure on our GCs this year also. So you are right, the costs are benign, and there might be slight benefit, might be, I think, 0.5 basis points or something. So let us hope, let us see if the prices remain at the same level, then we don't see any pressure on margins.
Understand. Thanks, sir. Thanks for that.
We also have Vivek, who looks after the international business, and international now contributes to almost 20% of our total revenue. It's a significant large business for us. So Vivek, would you want to say anything on the growth or our plans for anything you want to share?
Sir, I think Bangladesh has improved quite a bit. When we had closed quarter 3, we were in bit of a trouble in line with the industry over there. But Q4, we had seen a rebound. January was still okay. February, March, we delivered very good numbers over there. GCC is still showing some signs of the growth and everything. Russia, CIS is also decent for us. Only place of trouble is 1 or 2 countries in Africa, which are decent for us. But by and large, more places we are seeing good growth numbers over here.
Okay.
Mr. Thakur, are you done with your question?
Yeah. I'm done with my question. Thanks, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Percy Panthaki with IIFL Capital. Please go ahead.
Hi, sir. Very glad to see some back in positive territory. Can you give some more detail on exactly what was the work that went behind turning this brand around and sort of getting this performance back?
So, Percy, it was a all-round 360 plan, right from changing the brand name to, very aggressive marketing, both urban, rural, TV, OTT, digital, so everything. I think it was in Q4, we went very aggressive, on go-to-market strategy. So it was a well-planned rollout strategy for Smart and Handsome. We hope that the momentum continues. That is what we are seeing. We are more optimistic on the face wash category because that is a very fast-growing category. And on the other male grooming launches that we have planned for this year, we have plans in place. We will be rolling out in Q2. So we have been working for last 2 years now, and you would see some aggressive plans for this year for Smart and Handsome.
Got it. Sir, has there been any change in formulation along with the relaunch?
A minor tweak happens, Percy, which is in line with what the consumer needs are. So that is what it is. But overall, I can say our overall strategy, what we have been planning for quite some time now, has done well. Other than some dent in summer, I think most of the brands are in a very strong position. As far as manpower is concerned, with Xyrus coming in, I think that is complete now. Second quarter, as I said, we will be rolling out with the strategy on Kesh King, what BCG has recommended. So with that, I think more or less all our brands relaunches are done. So we are going aggressive on advertising. We have done almost, I think, 650, 670 crores of advertising this year, which is quite significant. And we will continue with that this year. So that's it. I think if summer fares well for the next four weeks, hopefully we will see some good numbers.
Got it, sir. Just another question is on your innovation rate. What is the contribution of new products for this fiscal FY25 that is just closed? And what would that similar number be targeted at for FY26?
Roughly about it is around 4% kind of revenue what we have generated from the products launched in last 2 to 3 years.
And will it be similar going ahead or?
So it should be in the range of 3% kind of minimum. Depends on the success we get going ahead on that.
Got it. And what is the thought process in terms of any new product launch, or not new product, but I would say any adjacencies, any new categories that you want to get into? Is it, I mean, you did mention that in Smart and Handsome, it would be a broader male grooming play. So I'm assuming some more subcategories would get launched there. But apart from that, do you think that your product portfolio is complete apart from the usual sort of varianting, innovation, renovation that goes on in any FMCG company, or would you like to enter any adjacent subcategories over the next 2-3 years?
So, but see, that is never complete. There are a lot of opportunities, in Jhandu. In pain, I said there are a couple of launches planned. In male grooming, in Kesh King also there are some D2C areas that we are going to come out with. This year itself we came with 25 new products, primarily in Jhandu care. So we are, this NPD momentum would continue. It is now a different strategy altogether for e-com, quick-com. There are very different offerings. For mass market, there are different openings. For MT, there are different openings. So it's like, there are a lot of opportunities identified, and which would all be rolled out in quarter-wise, So, yeah, so that.
Got it, sir. Moderator, can you just announce for Star One? I see there are no more people in the queue, so just announce it once, and if nobody comes up, then we can close the call.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. On behalf of Imami Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.